Hello, this is my mom. Okay, so back in March, we were all affected extremely by what's called the coronavirus. Now, I'm assuming that every single person that's watching this video has been affected in such a way. When the coronavirus hit, we were all kind of shook and kind of thrown off guard. And basically, what had happened was once it hit, it got to the point where we all needed to start secluding and shutting down businesses and kind of getting to the point where we were staying under wraps and staying distant away from each other. Now, when this happened, that means that all small businesses and big businesses alike that were not essential had to shut down. That means people lost their jobs and companies closed down and people filed for bankruptcy. And when this happened, a lot of the companies that were major companies that had to buy their stock overseas, certain products that came from China and stuff like that, all had to come to a screeching halt. Now, when this happened, that means that the stock market as well crashed because of the fact that they weren't able to get their supplies and people panicked. People sold their stock and just the stock market crashed completely. Now, this topic is very important to me because I've done a lot of research on it. And at the time of the stock market crashing, I knew that this was a good time for me to be able to invest in the companies that were already crashing because most of the companies were going to end up going back up. Now, I've done a lot of research myself and I've done a lot of homework and I've become very successful in the stock market because of it. And I'm hoping that maybe I can share some of my ideas with you so that you can also be successful in it. Now, today we will discuss how to properly invest in the stock market by finding companies that you want to invest in. Then, to be able to watch the stock market, to be able to figure out patterns for the companies that you chose. And then third, learning how to invest based off of logic and not emotion, because emotion will get you nowhere in the stock market. So first we will learn what companies we want to invest in by doing our homework and doing our research. Now, in uncertain times like this, when the stock market crashes, you have to be careful about which companies you invest in because you want to make sure that these companies are going to be able to make it out of the coronavirus because a lot of companies aren't going to make it. For example, in a CNN business article entitled "Warren Buffett Vows That the U.S. Will Recover from the Coronavirus," written by journalist Paul Monica, published in May 2020, Warren Buffett explains that he has full trust in America bouncing back from this pandemic because we've gone through much worse and we've come back. He stresses that you need to be able to pay attention to these companies and invest in American companies. You don't want to invest in companies that are overseas because everything is so uncertain and the market is so volatile, you don't know what's going to happen. But he knows that when it comes to American companies, there's a good chance of them bouncing back. Now, he tells you specifically, he says you can bet on America, but you have to make sure that you're betting safely. You have to pay attention to what you invest in and make sure that you're doing the right thing. Another example in Investors Business Daily article, Stock Market, What to Do as Coronavirus Cases Soar, written by journalist Eric Carson, published in June 2020, it explains that certain companies' stocks have been in an upward trend. Certain companies like Apple and Microsoft and Amazon, they all have been benefiting from the coronavirus. Now, right when it first hit, these companies did go down a little bit, you know what I mean? And if you were paying attention to them from the start, they dropped a pretty decent amount, but they ended up jumping back up and they ended up pushing even further past what they were when they first started before the crisis even hit. And now their stock is worth even more. So when it comes to finding the right companies you want to invest in, you want to do the homework. So when you do the homework, you can figure out, okay, is this company big enough to survive the coronavirus? Is this company going to be profitable during the coronavirus? People that are making masks and PPE and hand sanitizer and stuff like that. And Amazon, nobody's shopping anywhere. So you want to buy stuff from Amazon so that you don't have to leave your house and risk getting infected. These are the certain companies that you want to watch out for in a time like this. Now, the thing is that once you pick these companies, you can't just pick a company and invest. After you've selected the company you want to invest in, you have to do your research. You have to pay attention because just because you see a price drop doesn't mean that it's like, okay, let's buy. You have to figure out why the stock dropped. For example, in the Farm Letter article entitled "Acorn Falls Hard on the Bankruptcy Filing," written by journalist Tim Letter, published in June 2020, It explains how Acorn Pharmaceuticals stock dropped 32% after they had filed for bankruptcy. Now, this was a stock that I watched myself. I was watching the stock and it was usually anywhere between 35 cents to 25 cents. And I told myself, if it dropped to about 20 cents, I would invest, and I was watching the stock and it was watching it every single day. And then one day I look at it and it dropped down to about 13 cents. And I was like, that's way less than what I was planning on buying it for. So I was wondering what happened. I looked into it and I found out that they had filed for bankruptcy. And because they had filed for bankruptcy, everybody was selling their stock. Now, if I didn't look it up and check it out to see why it had dropped, I would have invested my money and there was a chance I could have lost, because it dropped all the way down to 9 cents. And then the next day it spiked up to 28 cents. And then the next day it was completely off the market. So if I didn't pay attention to the fact that it had filed for bankruptcy, there was a good chance I would have lost my entire investment. And, depending on how many stocks I bought, I could have won or I could have lost a lot of money just based off that deal alone. Now that we understand what kind of companies to invest in, we want to figure out how we can figure certain patterns. So when you find a company that you're comfortable with and you decide you want to invest in them, after doing your homework and your background search, you want to watch it. You don't want to just be like, oh, I like Apple. Apple sounds cool, I'm going to buy Apple. No, you want to do your research and you want to make sure, okay, let me watch how it goes up and down. Let me find where the medium is for the top and where the medium is for the bottom, because it's going to go up and down a lot, but there's a base high and a base low that you want to watch. So there's going to be maybe a 30-cent gap or a 60-cent gap or whatever it is. And then once you see it hit the medium low, that's usually when you want to start investing so that you can sell when it hits that medium high to play it safe, And there's different ways to do it. You can watch for trends, or, you can just watch it every single day. You can watch the news. But mainly what you want to do is you want to make sure that you're watching it to hit the normal medium height and the medium low. I say this because it'll drop way farther and it'll go way higher, all depending on the day. After you do something like this, you have to learn how to decipher trends. Once you do that, you'll be able to figure out, okay, once you see it going like this and it's going up and it's going down, you expect it to go back up. So that's when you realize at that bottoming out point, that's when you're going to want to start investing. So when you invest in it, it's going to go back up, and then you know where your happy medium is up top, and that's when you sell it. It's going to be the money that you make depending on how much money you invest. Like they say, the more you risk, the more you win. So after you do that and you learn patterns and things like that, you have to learn to buy not based on emotion. Every single person does it. You get excited, or you think that you see something that sounds cool and you want to invest, and it usually never ends up working out well. For example, in an Investopia article entitled "How to Avoid Emotional Investing," written by journalist Kim Zucchi, published in June 2020, it explains investing based off emotion is the main reason why so many people lose so much money in the stock market. A lot of people see the stock drop dramatically and they're like, oh, I'm just going to buy now. Or they see it starting to go up and they're like, oh, I want to buy it now to make sure that if it keeps going up, I'm going to make money. But the problem is, if you buy something based off of emotion or maybe an article you read on Facebook without doing your research, 99% of the time, you're going to lose a lot of your money. Now, if you're not educated and you're not paying attention to what you're doing, there's big losses and big consequences that come with it as well. For an example, in a Market Watch article entitled "Rookie Trader Kills Himself After Seeing a Negative Balance of Over $700,000, written by journalist Sam Langlois, as published in June 2020, it explains how a 20-year-old rookie investor downloaded the app Robinhood, and he wanted to invest in stocks. Now, he didn't know what he was doing, and because of that, it ended up costing him his own life. One day he woke up and he was over $700,000 in debt because he invested in these companies and just thought, oh, well, it's not a big deal. You know what I mean? And then when he woke up and he was, that far in debt, he just kind of figured that there was nothing left for him to do, and he just ended his life. And it's these warnings that I tell you, it's like, people are so willing to invest their money, but they don't want to lose it. And that's why you have to be smart about the decisions that you make. And if you do the right decisions and you make the proper planning, then you can avoid situations like this. In conclusion, the stock market is an easy way to make money if you do it correctly. If you follow my guidelines and you do your homework on the companies you want to invest in, and you do your research and you can figure out a pattern for when to buy and sell it, there's a good enough chance that you're going to be very successful in the stock market. Now,
every single person has been affected by the coronavirus, but not everyone affected has to be affected in a negative way. If you invest the way that I tell you to invest and you follow my guidelines, there's a chance that you can make a bunch of money without ever getting off of your couch. Thank you for your time. My mom.